This week on the Trading Bell, I'm talking to the Executive Director for Nile Capital Insurance Brokers, that is Arthur Opinya. Now, they have become the 8th company to join the NSE's Ibuka program. We're going to chat more about what they plan to get through joining the program, as well as the products and services they offer, and of course, some of his insights into the insurance sector at large. But before we get into the conversation, take a look at his profile. Arthur is a graduate of Kennesaw State University's Coles College of Business with an MBA in finance as well as a bachelor's degree in business administration in finance. He is also a certificate of proficiency holder from the Insurance Institute of Kenya. He has over 16 years' experience in the financial services industry, spanning non-bank financial institutions, retail banking, commercial banking, microfinance banking and insurance in the USA and Kenya, working for CompuCredit, Standard Chartered, Faulu Kenya, Commercial Bank of Africa and Jubilee Insurance. He was instrumental in the launching of mobile banking in Kenya and across Standard Chartered's Eastern and Southern African markets for the retail bank in 2008 to 2009 and has experience in product development, business development, project management and operations. He is a co-founder of Nile Capital Insurance Brokers and is primarily in charge of business development and operations. All right, Arthur, thank you so much for joining me today on Trading Bell, and it's an exciting time. You're the 8th company to join Ibuka. How does that feel?
Feels very good. We're quite fortunate, happy, humbled to have been recognized by an institution as revered as the stock exchange to join this platform.
Amazing.
Yes.
So I do know that you opened your doors in 2013.
Yes.
So why don't you tell me a little bit about, Nile Capital, what you aim to do? What are some of the things that you can offer?
Yes, it's correct. We did set up the business and get into the broking field in 2013. Primarily, we are an SME-focused insurance broker. Insurance broker is a term that's always thrown around. People don't understand what it is exactly we do. But primarily, we buy insurance on behalf of our clients. We represent them at all times. We mitigate whatever we foresee and try to mitigate whatever risks that they may have, and ultimately end up representing all their interests in regards to insurance, offering them technical advice, and just pointing out certain pitfalls that they can avoid whilst going through the whole insurance process.
So that's quite a wide range of things that
Yes.
you do.
Yes.
And when it comes to the SME sector, I know sometimes it's very hard for insurance penetration, especially when it comes to the informal side of things.
Yes.
So how did you manage to crack that code?
Well, I think it's just perseverance, hard work, contacts, also networks. When we started, we took a very deliberate step to set up in an SME zone. So the first 4 years of our operation, we operated from industrial area. We're able to make inroads with various SME businesses that are set up there. We gained their trust, and they were then able to give us referrals of different people who are in businesses. And we're also quite fortunate that a lot of our SME clients were then able to grow into large businesses, and we've ridden that wave with them and we've grown with them. But we're primarily focused on the SME sector. We feel that it's a very underserved market.
True.
Everyone in that market is primarily driven by price, and they then often may get themselves into situations where they don't understand what it is that they bought because they were racing for price, whereas if they would have sat down with any broker, they would have been able to have been taken through the nuances of the contracts and possibly been able to have been well covered.
So you help them mitigate a lot of risks as well.
Yes, a lot of risks, Also, make recommendations on any additional covers or policies that they may have, or covers that they may not need, that they may think that they need. I'm quite fortunate to have a partner who we're on the same wavelength with on a few things. But I think all around we've seen a lot of issues where family businesses are, they're not able to crack and get to the next generation because you'll find that there are a lot of weak internal structures. So ultimately, I think one of the main things that I'm quite hopeful that the Ibuka program will give us is the ability to just bed down and just have proper corporate governance structures. So, things like, we're quite fortunate to already have a board, but, is there a board charter in place? Is there is internally for our staff, being an SME business, very rarely do we give, very rarely do you find SME businesses having contracts for staff. So do we have staff contracts? Do they have pensions? Do they have an HR manual? Is there an internal finance manual? Is there an investment manual? And I think just making Nile Capital fit for expansion, fit for any other person out there who may be willing to come on board. Do we have the same structures that, for example, Standard Chartered or CBA or KCB would have internally that would give a potential financier or investor the comfort that if they're going to come on board, then there are some very sound corporate governance structures.
Okay, so it's helping you build a foundation to leap onto the next phase.
Yes.
And speaking of that, some of your expansion ideas are also, I'm sure, what you've been thinking about because you're diversifying your revenue streams via Ibuka.
Yes.
So where do you see yourself going in the next couple of years in terms of expansion? What are your vision, for that?
I think that's a good question. We see ourselves expanding regionally within the country and within the East African and space and we dream that we'll be able to then expand further south and to the west. So there's a very clear strategy as to different markets that we'll go to, but I think the world is changing, and I think the world is moving more so to be technology based.
True.
So I think we're also looking at various technology platforms to leverage on, just to help us expand the business, have diversified revenue streams, but also just tap into a totally different market segment. I mean, I think it's some of the statistics in Kenya. I think I'm not so sure on this, but I'd like to believe that I think more than 50% of the population are 24 years old and under. I mean, these are guys who have grown up, the last 10, 15 years with smartphones, with internet penetration. They don't remember dial-up internet when it was only Africa Online and sending faxes, etc.
Faxes and floppy disks.
And floppy disks, exactly.
It's a whole different world.
The bigger floppy disks, the ones that were five and a half. You remember those ones? So, I mean, I think most businesses have got to embrace technology and tilt and pivot towards that. And we have a plan to head in that direction. And we're quite hopeful that with that, coupled with our expansion into different markets and also into different product streams, we're looking at trying to get into some of the other value addition roles outside of just direct broking. So we're quite hopeful that we'll be able to do that.
So digitization is a great part of the
expansion. It's a key pillar. It's a key pillar of our expansion strategy.
Okay.
Yes.
So even as we talk about the insurance sector at large, there are some of the challenges that have been cropping up now and again, constantly, including the penetration rates and more. So what are your thoughts on some of those major challenges that are in the sector right now? I
think for me, some of the biggest challenges from where I sit, what I see is yes, the penetration rate is low, but more worrying for me is, the state of our underwriters, our direct underwriters. I think only one underwriter listed on the stock exchange returned a profit. I could be wrong. I think one or two.
Yes.
Majority of them declared losses, and I think it's substantial losses. And I think it's a factor of what's going on in the economy. We feel that from where we sit, we can see that the delayed payments, which from an insurance perspective can be quite catastrophic, the knock-on effects. For example, company A takes a policy through Nile Capital. They don't pay Nile Capital. Nile Capital has bound insurance company B on this policy. Insurance company B has a contractual reinsurance arrangement with the reinsurer company C. That money not coming and flowing.
So it's a web.
It's a web. It's a domino. It's a chain effect. So the reinsurer at the top doesn't have the premiums. The direct writer doesn't have the premiums. The direct broker doesn't have the premiums. The client may be waiting on an invoice to be settled. So it's a knock-on effect, and maybe that's what's affecting some of the write-offs that you're seeing being placed by some of the direct writers or the direct underwriters in the market. But I think the second biggest thing to be in the industry is are risks being priced well. Where risks are not priced well, and there's decreased revenue for the underwriters and the reinsurers, and those risks do crystallize, that can quickly turn an underwriter into a loss-making position. So I think for me the biggest thing is there needs to be a flow of funds, going through the whole chain, which should hopefully help our reinsurers and our direct writers to at least have some cash flow to settle any claims that may crystallize, and also the pricing of the risks by brokers, by underwriters, by reinsurers. I think that needs to be done well. There needs to be a discussion around moving away from a race to the bottom, because from where I sit, almost everyone is looking at how much will I pay, not necessarily am I fully covered for this risk.
True.
Yeah.
And one of the things that's very intriguing is the fact that you cater to the SME market. You yourself started, from small, growing with them to larger corporations. Yes. So for all of those people out there, there's so many Kenyans who want to have startups, who want to achieve this vision that they have in their head for this business they've been dreaming about. Yes. So what would be your biggest takeaway from all the SMEs you've worked with for making it successfully out there when you're starting your small business?
I think start small, take baby steps, and be consistent. Focus, be consistent. Wake up every day. This is what I'm doing. There are a lot of distractions out there. I myself have been distracted before and had to come back on a path. So I think if you start small, learn also, continuously learn. If you've decided to focus on a specific field, be a subject expert in that field, and just be consistent, very small, every day, repeatedly, and eventually you'll be able to break it. Okay. And a bit of luck also, isn't it? Huh? Yeah.
Amazing. And finally, as we wrap up, insurance brokers, insurance salesmen are known to be very persistent.
Yes.
So where does that persistence come from? How do you keep that fuel burning? Because you will be told by an insurance broker you need to cushion yourself again and again and again, and sometimes that persistence, I don't know how they keep at it, because clients can be very difficult to crack. So your recipe for that constant persistence?
I think it's just loving what you do. I mean, do you have a sincere passion for what it is that you do, and you don't treat it as a job, it's a calling. So are you constantly out there? Are you constantly talking to people? You do need thick skin, because you'll get a lot of rejections. A lot of people will think, oh, damn, it's that insurance guy, I'm not going to pick his call. or yes. He only wants to see me because of this or that. But ultimately, I think it just goes back to what we're discussing about. Are you passionate about what you're doing? Are you doing the same thing every day? and trying to grow and become an expert in that field. Eventually, through referrals, people will know and people will say, this guy is good, or speak to this person. And slowly by slowly, like a snowball.
So it gets easier.
It gets easier with time, and you'll be able to just operate and keep going.
Okay, thank you so much for joining us on the Trading Bell today.
Thank you.
Well, that was the Executive Director for Nile Capital Insurance Brokers. But we're not yet done, of course. We have a lot more, including markets. Let's take a look at that.
Kengen, at the end of the day, is energy, and energy, especially in this time when people are looking for safety, you would tend to see investors going for utilities because they tend to give you some level of safety.
Time now to get into the market analysis. Of course, this week we're going to be having Samuel Gishohi with us from NIC Group, and he's going to be breaking down the numbers for us. Thank you so much for joining us.
You're welcome. Thanks for having me.
Always a pleasure. Let's start with our movers. We're seeing Kengen moving substantial volumes there, about 9.5 million. What is your take on that?
Well, we've seen quite a bit of foreign interest in Kengen. We don't have any fundamental reason, we haven't gotten any new results or anything. But in the background, we know they've gotten a very good consultancy and support deal with the dam in Ethiopia. So I think that can cause interest, because going forward that will be quite a good revenue generator. But Kengen, at the end of the day, is energy, and energy, especially in this time when people are looking for safety, you would tend to see investors going for utilities because they tend to give you some level of safety. Yeah. Okay.
And another one of our big movers is Scan Group with about 5 million in terms of volume. Any thoughts on that?
Well, they did give a special dividend, I think 4 shillings, and that means you would have seen the share price. Of course, for dividend seekers, will have an interest in that. We did see the share price spike after the announcement of that dividend. So you would expect that when the books close, then you would also see them join the losers, because then people will have, you will be buying the share ex-dividend, which means they will not get the dividend.
Okay. Let's take a look at some of our top gainers. We've seen TransCentury having a change of 29.24%. Significant?
Not necessarily. If you look at the gainers, you're going to notice that most of the shares sitting there are very illiquid counters, 2 mostly locally traded. You see TransCentury, East Africa Cables, which incidentally is owned by TransCentury, Uchumi Supermarkets, Home Africa, British Oxygen. And that is a sign that the market is either at a level of stagnation, because then you're not seeing the big, blue chips on that list. You're not seeing the more liquid companies, which would probably attract more foreign activity, or which tend to be the usual suspects when it comes to high market, when there's high market activity. The same applies to the losers. You're seeing Mumia Sugar, IGADS, Can General, and most of these are also very illiquid stocks. So I think seeing that foreigners have stayed off the market, largely off the market for the last week, since of course the tariff war between the US and China started, then it leaves the market to now the local investors. And most of these you're seeing on the gainers and losers are very speculative. And think about it. If you were buying something like Home Africa at 61 cents and it went to 71 cents, you've actually made a gain of over 10% in within that week. Same thing with, say, Mumias, which last week was at 36 cents and this week was at 27 cents. That's over 10%. So speculators tend to play with these penny stocks, which, you know, and they're playing with the volatility because right now the market is very volatile. And they make, you know, the quick shilling here and there.
Okay. Is that a smart strategy for them then?
Very risky, very risky. I think when you want to speculate on the market, you really need to understand first the technical side of things, which is now the technical analysis, which means you can see patterns in, you know, the ups and downs of a certain share, buy on dip, sell on spike, and, you know, play with that. You'd also really need to understand what will move those stocks and where their bottoms are and their highs are, so that you're sort of able to predict. Of course, predicting a market is a very futile business, so again, it's very risky. But if you can play it right and you can keep beating the market, then that's fine. But at the end of the day, an efficient market means you can't beat the market consistently.
Okay, fair enough. And finally, let's take a look at the NSE 20 share index. Not so much movement, 0.84% on the downward. Any thoughts on that? As you've said, there's a bit of stagnation when it comes to the trading, especially with international investors. Is that what we're seeing reflected?
Well, I think we have reached that stage in every bear where you get despondency. People have tried to average down consistently. I deal with a lot of retail investors. They've run out of money. So they can't, you know,
Keep
everybody is
pumping.
now sitting there and thinking, okay, something needs to happen, but I can't be part of it. Foreigners have also been selling, did the sellout immediately after the Trump, you know, issue started, the tariff issue started. Now they've sort of now reached a point where the markets are up, down, whatever happens, and so they've also sat back. So right now it's more like a stagnation period. So the question is, what's going to happen next? If it goes up, it could really be the beginning of another major rally. If it goes down, it could mean maybe, you know, panic sell-offs. But my message would be to investors, this is the time to average down and to buy, because you're buying on the low. It's of course the most difficult time to buy, but it's the best time to buy. Most people are afraid right now, so convincing them to buy is a tough call, but I think that's what they should be doing.
Very tricky.
Yes, it is. Yeah.
Okay. All right. Thank you for breaking that down for us. We'll come back with the question, but for now, let's take a look at Markets 101. All right, well, let's take a look at some of the questions that have come in from you, and one that we'd like to answer this time around. The question was, well, what do I look for in a stockbroker, especially if I'm a first-time investor? So I'm going to let you take that one for us.
Well, I would say maybe you look for me, but yeah, and on a serious note, when you're looking for a broker, you need to look at the company that you want to offer you the brokerage services. First of all, start with the relationship. It's good to visit the broker, see how they receive you. Are they willing to give you all the information that you need on, you know, how to trade and, you know, ideas on how to prepare your portfolio, you know, doing a risk profile so that they know exactly what kind of investor you are, so they can match your investments to your personal needs. I think once you've dealt with the relationship side, you need to look at corporate governance. Who's the broker? What's their reputation? And, you know, just have a bit of a feel of how they have performed as a broker out there. Usually they're publicly, you know, they announce their results publicly. You need to also be very keen on finding out what systems they use, because then again, you want to know that your orders will be quickly executed whenever you need them executed. Maybe do they have online access or mobile trading platforms which can assist you to be able to view your statements and your accounts, etc. So most of those things will really be the difference between how quickly you can access the market, especially when they say a rally or a drop in the market.
Fantastic. Very, very pivotal information right there. On that note, though, we're going to take a look at the NSE historical fact. All right, with that, it's time to wrap up this episode of The Trading Bell. Once again, Samuel, thank you so much for joining us.
It's a pleasure.
All right. And of course, you can keep up with us through our social media handles appearing on your screen right there. Remember, the Trading Bell aims to bring you all the information from the markets and beyond. Today, we also had a very insightful conversation with Arthur Opinya of the Nile Capital Insurance Brokerage that has joined the Ibuka program here at the NSE. Until next time, my name is Maalika. Kazia.